Nvidia CEO Jensen Huang met with President Donald Trump at the White House just days before a planned trip to China for the chip designer's chief executive. For more on the latest from Nvidia, the only member of the $4 trillion market cap club. Let's welcome in now. Got Dan Ives, Wedbush Securities Managing Director, Global Head of Technology Research. Dan, it is good to see you, my friend. I love the look today, Dan. It does look like, you know what it looks like, Dan? It looks like I'm interrupting your tea time. So I'm gonna get through this interview. We're gonna get through it real fast. I feel like you got places to go. Let's start with Nvidia, Dan. Nvidia CEO Jensen Huang, he's on the way to China. We know there, Dan, he can't sell his latest and greatest chips, right? And it's costing his company a lot of money. I'm curious how you think this all plays out. Does he get Trump to reverse course? Does he find a workaround? What do you see ahead?
I mean, he's not going to the White House just to have lemonade with Trump. I mean, the point is, our view is that the restrictions when it comes to China, a lot of that ultimately will at some extent be lifted where Nvidia can sell their chips into China. Remember, I mean, they're not going to just give $8 billion a quarter to Huawei on a silver platter. And it's all part of this negotiation that you see. But there's only one chip in the world fueling the AI revolution, and it's led by the godfather of AI, Jensen Nvidia.
If he can't sell his latest and greatest in China, Dan, how does he make that up? Could demand from the sovereigns, the Saudis, the UAE, could that make it up?
Look, that can make it up. And I still think Street's underestimating growth by 20, 30% in the next few years. But you do not want to give China just away to Huawei. I mean, that where Nvidia can't touch it. And they know, and Jensen knows, that continues to be the biggest market incrementally that they're going after besides the US. And it's all part of this negotiation. You cannot just hand that business to Huawei. And that's why, look, it's all part of this high stakes negotiation. But there's only one chip in the world that's fueling it. And Trump knows a big poker chip that he has in negotiations is Nvidia.
I'm sure there are some viewers, Dan, this week, when they saw Nvidia hit that milestone, right? They might have thought, hey, I missed my chance, I missed my opportunity. I know you feel differently. What are the catalysts that keep this one, in your opinion, moving higher?
I think 5 trillion and beyond are next, because it's my view, we're in a golden age for tech. It's led by Nvidia, but it's speaking to the AI revolution. I mean, behind the velvet ropes, they're gonna let Microsoft into the $4 trillion market cap club as well. When it comes to Nvidia, this is still just the beginning of a 3-year tech bull market, and it's being led by Jensen.
Let's switch gears to another name I know you like, Dan, and that would be Tesla. You like the name. You don't seem happy with Elon Musk and how he's spending his time. He's right back into politics, right? Full speed ahead. He's going to create this American political party, this new political party. You laid out changes you want from the Tesla board, Dan. You say new pay package for Musk to 25% voting control, guardrails for the amount of time Musk spends at Tesla, and oversight in political endeavors. Does any of that actually happen, Dan? What odds would you give it?
Yeah, and obviously Musk didn't like, what we laid out. I believe the odds of that happening are ultimately just some combination more than 50% in terms of that. And especially when it comes to 25% voting right, what I view as an XAI merger, to me, that is ultimately sort of the next stage to where we see this all heading.
I have to ask you, Dan, only because we're showing the post there. When you lay this out, Elon Musk says, shut up, Dan. So the owner of X, on X, guy's worth $400 billion. He tells you to shut up. You saw that, Dan? What did you think and feel when you saw it?
Look, I mean, I knew Elon and knowing, for 20 years and him and following Tesla and being such a big support, he wasn't going to like it. But again, friends could disagree, right? And so hopefully, over the coming months, we're able to work out our differences. But as one of the biggest supporters of Tesla, we needed to do that. Given our view, that's what the board needs to do to ultimately move this forward. Tesla's going into its biggest stage of growth ever in autonomous and robotics. Musk needs Tesla, and ultimately the biggest asset continues to be Elon.
So you had your criticism there, Dan. It's important to note you remain bullish. You tell your clients are at Wedbush, they ask you what to do with them. You say, listen, this one's an outperform. It's still a buy. What would you need to see, Dan? What would have to happen for you to rethink that rating?
Look, I mean, to me, it just continues to sort of be this is going to be one of the biggest winners in AI along with Nvidia. So for me to get bearish, I don't see it relative to everything we see in front of us when it comes to autonomous.
Finally, Dan, another ticker. I got to get this one in. Let's talk Apple. Another name you like, right? The team at Lightshed made some news this week with a provocative report. I know you saw this, where they were asking, is it time for a new CEO at Apple? You know that company well. You know the CEO well. What's your response to that question?
Cook continues to be the Hall of Fame CEO. He will lead Apple, I believe, at least the next 5 years. That said, AI revolution can pass Apple by. I believe the time's come for them to make an acquisition in terms of Perplexity. And I think that's different. It's Cook reading the room on this next chapter. Because look, you miss AI, that would taint a big part of his legacy if you miss the AI revolution.
It would be a hard shift to do an acquisition like that, Dan. I mean, you know, Apple does do, you know, acquisitions, but traditionally they stay small. I think the biggest one they ever did was Beats for $3 billion. What kind of odds would you give that they would make a move? Perplexity, I think, valued at around $14 billion, I believe.
I believe they don't have a choice. They have to do a deal. I get the DNA of Cupertino. We could build it better than them. But it comes down to, it's like a baseball player in a slump. You got to change your bat, right? Mantle, Cobb, Garrett. You know, you go back, Babe. They change their bat. Cook, it's time to change. Need to do Perplexity, in my opinion.
Finally, Palantir, Messi of AI, as you put it, Dan. You raised your target. You go to 160. You're doing your checks, and obviously you like what you see. What are you seeing? What are you hearing?
The AI revolution is being led by Nvidia and Microsoft, but Palantir, they're going to be one of the core players. I think it's $1 trillion company in the next 2 to 3 years. And look, the haters will hate, but it's just the beginning of the use cases playing out on enterprise, on government. That's being led by CARP, and that's why, you know, there's only one Messi of AI, and it's PLTR.
What do you say to the skeptics, Dan, the bears, who will say, listen, and they've been on this show, and I've asked them, they'll say, listen, I like the tech, they'll tell me. I like the fundamentals. I don't like the valuation. It's an irrational valuation is how they'll put it. They'll say that these levels, the risk reward does not look attractive. What's your response?
The bears are in hibernation mode, and in their spreadsheets, they can see AI. And if you focus just on valuation, you missed every transformational growth stock the last 20 years. And Palantir, they hated 15, despised it 50, yelling at 100. It's going to continue. Again, it's like right now, this is being what I view as one of the best AI plays in the world.
I know you tell your clients to say this one on the path, you argue, to become the next Oracle.
It's the next Oracle, the $1 trillion path. They're in a left lane, a Ferrari going 100 miles an hour. A lot of the competition's in a minivan going 45 miles an hour right lane.
Dan, always good to see you. Always good to have you on the show. Thank you, sir.
Thank you.
We saw, obviously, the reports and images of CEO Jensen Huang at the White House yesterday. And so that could be the next catalyst, potentially, if there's, some kind of new chip that they're able to ship to China. There's been talk, obviously, of them working with more of a high-powered desktop-style chip to turn it into an AI data center chip. Like those desktop chips are still incredibly powerful, so they would be able to do that. They just wouldn't have the kind of technologies that some of the data centers, the high-end ones, have for other countries. But yeah, our earnings is going to be massive, right? This is going to be a part where we continue to see data center growth. We're going to see more, perhaps, of the sovereign AI growth. We just have to see when that starts to be reported. But that's something that Nvidia is really banking on, is the sovereign AI, and obviously Wall Street as well, looking at that and saying, look, this is another potential area for Nvidia to grow. There was that Saudi Arabia deal. They had their GTC in Paris, talking a lot about building out data centers in Europe. So obviously that's going to be a big part of that. And then, the idea that we've kind of taken the China equation out of revenue going forward for now, barring any kind of announcement between that meeting yesterday with Jensen Huang and President Trump. But the idea that China is no longer that overhang, save for a potentially $8 billion hit from products that they're not able to sell there that they were planning to, I think that could really boost Nvidia among investors' eyes going into the announcement of earnings.
This is a company, let's keep in mind, 3 months ago, disappointed investors. I mean, the numbers were good. They showed growth, but not enough growth. I'm trying to figure out, I guess, if we're setting up for a disappointment when they report.
Yeah, I think that is such a great comment and the question that everyone's asking. And I'm going to point back to the resilience of corporate America and diverse revenue streams. Nvidia also has diverse revenue streams, and we see an increase in gaming in addition to AI. But Nvidia also touches what's necessary almost indirectly for blockchain, for stable coins, and this tokenization and digitization, which is very much fiscal policy, as we were saying earlier with crypto week. So Nvidia, I do think, is absolutely still undervalued. It's not too late to get into Nvidia. It has AI dominance, but it has efficiency dominance, and there's so much more to that story.
Ali, your comments or your analysis on the AMD upgrade over at HSBC really brings up a good point. It might be okay to own both AMD and Nvidia. Like, there are other players inside of the AI chip space, and if Nvidia is doing well, AMD could do well. Maybe not Intel, but AMD.
Yeah, and AMD has done very well this year. The stock is up around 15%. So that's just something that strategists are saying, is that you don't just have to have Nvidia. You can have exposure to a lot of various tech names and a lot of AI plays as well. There's multiple touch points here. Many have told me that we're in the first or second inning, that there's still a long runway of growth. And even if you think about the software companies, those companies that have exposure to AI, they could be another play down the line. So you have the chip makers, you have your infrastructure builders, and then all the companies that really benefit from this. So there's just a lot of opportunity in this market. And what's great is that it's not so concentrated in the Mag 7 or the tech sector. We do have this broadening out. We have record highs for financials, industrials, communication services, and that is what's going to be key to maintaining this momentum.
It's amazing just to watch this Nvidia story. On one hand, AMD gets its upgrade, Intel's maybe on the verge of breaking itself up. Just weird times.
Let's put some context behind this number. At a $4 trillion market cap, Nvidia is now worth more than Apple, Microsoft, and even Saudi Aramco. It's bigger than Germany's entire economy and almost twice the value of the entire Russell 2000 index. And if that's still not enough to show you how dominant this company has become, you'd need 3 Metas just to get close to Nvidia's valuation. Plus, it's also worth more than Disney, Netflix, and Comcast combined. So the big question here is, how have we arrived at this moment? Well, it all starts with those AI chips. Nvidia secured a near monopoly on the tech that powers today's biggest AI models, and demand from companies building out these massive AI data centers that sent revenue soaring up more than 200% year over year. But what's even more wild is how fast this rise has been. If you take a look at this chart from Bespoke, just over 2 years ago, Nvidia wasn't even in the $1 trillion club. It hit that milestone in June 2023, then doubled to $2 trillion in just over 260 days, hit $3 trillion 3 months after that, and now here we are today. And if history is any indication, these mega cap milestones, they tend to draw even more investor interest. On average, stocks that cross into the $1 trillion club rally another 9% over the next 6 months. Nvidia's done even better, averaging gains of more than 26% after each new market cap milestone. That being said, there are still some valuation concerns, since at each one of these breakthroughs, Nvidia has traded at an average of about 38 times forward earnings, making it one of the most expensive mega cap stocks out there. But here's the twist. As Nvidia's market cap has climbed, its valuation has actually come down. So in other words, it's become quote unquote cheaper, even as the stock has gotten more expensive, a trend that we really haven't seen with other tech giants like Apple or Microsoft. And that's why many on Wall Street believe this stock still has more room to run even at these levels. Sources I've spoken to say Nvidia could be on track for a $6 trillion market cap in the not so distant future. Still, that is a high bar. We just got to $4 trillion. Nvidia, the first company here to get it done, showing that we're in this defining moment, not just for Nvidia, but really what this AI boom could become for the entire tech industry.
Nvidia making history this morning as the first public company to reach a $4 trillion market cap. We're joined now by Stacey Raskin, Bernstein Managing Director and Senior Analyst, to talk about about this milestone. Still with me as well, Kevin Gordon, Charles Schwab Director and Senior Investment Strategist. Stacey, thanks for hopping on to talk about this. Whenever I think about Nvidia and chips, you're the guy that I want to come to and get some perspective.
I appreciate that. Thank you.
Yeah. So, I mean, was this feels inevitable? Do you think it was sort of inevitable that we get to this $4 trillion level? And what do you think is responsible for the latest leg in Nvidia?
Yeah. Look, in the markets, nothing is truly inevitable. Maybe now that being said, look, AI is probably one of the largest technological inflections in our lifetime and probably in history, and they're right at ground zero creating it. And so if that is going to be as big as I think many and myself think it can be, why shouldn't they be benefiting from it? I mean, they should be presumably benefiting from it more than anybody else, and clearly they are. So in that sense, I would like to think that it could have got here, and it did, and I'd like to think that this is not the end as well.
Well, and one of the things that some investors have talked about is the valuation of Nvidia. Even as it has climbed and climbed, though, the PE has not gone crazy because the company keeps earning more money. At what point, would valuation look stretched? Are we anywhere close to that yet?
Well, versus its history, clearly not. I've seen it trade, as high as 60 times earnings. And, this has sort of been a controversy the whole time. I remember, before this started, it was expensive. It was actually more expensive than it is now. And just as the stock itself was running up, a lot of people used to make the point about valuation, but they were sort of conflating valuation with market cap. And I made the point time and time again, I may have even made it here, that to the extent that the stock price had gone up, the earnings had gone up even more, and the multiple had actually come down. And if you look among all the AI stocks, quote unquote, right now within semis, it's probably one of the cheaper ones now, as long as you believe that the numbers are achievable. To this point, they look pretty achievable. Yeah, the valuation looks pretty good to me.
And it's funny, Stacey, because we're talking a day after you caught my eye with the note that you came out with. It said, U.S. semiconductors, time to awaken from tariff slumber.
Yes.
Is that the big stumbling block for Nvidia and its competitors?
Well, maybe less so. So tariffs in general, people, the whole sector, not just in semis, but everything kind of got whacked in April during Liberation Day. And with all the back and forth and pauses and everything, people have sort of, dismissed tariffs, I think, as a risk. They clearly must be, because the markets probably are at record highs. And, Trump sent out some tariff letters a couple of days ago that were mostly consistent with the reciprocal rates that he talked about before. And it looks like those rates may come back on August 1st. And within semis in particular, we have the 232 investigation that's going on. And my assumption is that we actually will see tariffs specifically on semiconductors at some point, probably soon. And it is something that I do think investors have not really been looking at. So it's something that should be. Now, as far as that goes, the AI space actually may be a little bit more insulated. Number one, just because the demand, I think, is actually quite real. But in terms of the tariff structures themselves, most of the AI servers that are used in the U.S., it turns out they actually come in through Mexico. And there's another broader carve out with this stuff that comes through Mexico that's USMCA compliant, which these servers actually have no tariffs on them at all. So I think tariffs, nobody's completely insulated if it actually gets implemented. But I actually think the AI supply chain, in some sense, may be somewhat more relatively insulated than other areas of the space because of that Mexico avenue and some other things. Plus, like I said, I think the demand in general is off the charts. If costs go up, I think spending still happens.
Yeah, Stacey, I was going to ask, separate from, 232 and what happens with those investigations, if you just look at what's being proposed now in terms of countries, and we'll find out whether, August 1st is a firm deadline. But beyond that, or in addition to that, I think one of the interesting things that's come out recently, especially with all the letters that have gone out so far this week, is this focus from the administration on transshipments from China.
Yes.
Whether there's an enforcement mechanism, I think that remains to be seen, and how well that can be enforced. But how are you thinking about that, in terms of risk, whether it's from China or from, certain Southeast Asian countries that are then caught up in a little bit of this predicament, rock and a hard place between the U.S. and China?
Yeah, it is true. And so they are trying to block transshipment. So what the letters said, basically, if we've got higher, I'll make an example. If we've got higher tariffs on stuff from China, you're buying stuff from China into Korea and then shipping it out, it's going to be charged a tariff at the higher rate, right? They don't want to be able to use transshipments through other countries to try to block off China or other countries like that. So that is a risk. Now, how they would actually track that and the administrative and logistical overhead that would be required to actually track and enforce something like that, I don't know. And I actually don't know that the capability to do that among these companies actually exists right now. So there's a whole other debate that this probably like we could have at some point on that. I don't know how they will enforce it. But clearly, you know, like the Trump administration is trying to carve off China from the rest of the world. And in some sense, they may be setting the countries who play in both markets against each other, because things that the U.S. wants to do, I mean, China's going to want the opposite. And, you know, in some sense, a lot of these countries will, or a lot of these companies will be between a rock and a hard place. I don't exactly know how this is going to be dealt with as this stuff finally gets implemented, if it in fact it does get implemented. I don't know.
So all of this notwithstanding, Stacey, we know that you still like Nvidia, and we've talked to you before about other semi stocks within the universe that you like. But just to remind viewers, you know, you're a buy on Nvidia. What are the other places where you still see upside and opportunities, especially given, as you said, Nvidia actually looks pretty fairly valued even versus some of its competitors?
Yeah, so I you know, in our specific coverage, I like the AI names. I like Nvidia and Broadcom. I think tactically, if I had to pick one over the other, we like them both. I'd probably lean a little more towards Nvidia just because it is cheaper, and I think they've got pretty smooth sailing, I think, through the end of the year. Like again, the Blackwell supply for them has kind of opened up, and they've zeroed out China. You know, there are sanctions on what they can sell into China. They've zeroed it out. So to the extent that they can work around those at all, if they can, that would represent upside. Broadcom has a lot of AI upside as well. It mostly comes next year. So that starts to get attractive. I'd be looking at that one on dips at least. I also like Qualcomm. I seem to be the only one that likes Qualcomm. The issue with Qualcomm, there's no real catalyst, and like earnings doesn't really grow because, you know, they sell stuff to Apple and Apple's designing them out. Like this is totally known, but it does limit the EPS growth for the next few years. But I actually think under the surface, things are looking really good there. And, you know, you get to 2027, maybe when Apple is kind of out of the model, some of that goodness starts to really show. And the stock is very, very cheap. So I think it's at least worth sharpening pencils on. I'm mostly lukewarm on most of the rest of the space. Like my analog coverage, they're very expensive. They're actually seeing some upside, I think, near term. Most of them are calling for a cyclical bottom, which maybe, although that would also look the same as tariff-related pull forward. And I'm of the belief that we probably are seeing some pull forward. And again, my names are fairly expensive in the analog space. We've been a little lukewarm there. AMD have been lukewarm as well, although I kind of understand why that stock has been running because, you know, the big story for AMD is the MI450, which comes next year. It's not for a year. You can dream right now. That number can be as big as you want. We saw the same thing last year around this time when people were thinking how big the MI300 for them could be in 2024. It turned out not to be as big as people thought. But for a while, the stock really worked, and we're seeing similar dynamics now. The other one in my coverage is Intel. Intel's kind of a basket case. Like I'm kind of, I always joke, I've made my career being negative on Intel. I'm kind of afraid to short it. We're neutral on the stock, right? Because I mean, it's sort of just like event driven and headline driven, but it doesn't feel like a long to me either. It's going to be a slug. Call me in a few years on that one.
Yeah, it's hard to find the Intel bulls even after all that has happened, Stacey. It is great to see you. Thanks again for hopping on. Nvidia, which has now hit $4 trillion in market cap, and the stock is at a record with that 2.5% gain that we are seeing here today. There was no particular catalyst in today's session that was leading Nvidia shares higher, just more of the flows that are going into large cap technology that we've been seeing. And let's talk more about all of this. And for that, I want to bring in my contributor for the morning. That is Kevin Gordon, Director and Senior Investment Strategist at Charles Schwab. So Kevin, we've all been sort of waiting for this Nvidia move, $4 trillion, a big milestone for the company. What does it mean for the recent tech trade that we have seen? I mean, sometimes when we look at this kind of move, we're like, is this the end of a move or is this the beginning of the next leg?
Well, I think what's interesting is that this is not just an Nvidia story. It's not necessarily just a mega cap story. If you look at the breadth of semis as an industry, it's actually improved quite sharply over the past few years relative to where we were. A couple of years ago, you were at 0% of those companies. If you're looking at the industry in the S&P 500, none of them were above their 200-day moving average. Now you've gotten to above 80%. So this is not just a one stock story. This is not just a mega cap story. I think that there has been some pretty significant movement under the surface. So I think that's a positive thing from the standpoint of, you look at the largest companies in the S&P. The 5 largest companies by the end of the second quarter, they made up just slightly less than 30% of the S&P 500's market cap. So that concentration risk has definitely crept back into the market, but it's not being accompanied by just a few stocks that are leading the market higher that are actually outperforming. There has been a pretty significant, resurgence in breadth across, not just within semis, but across other, parts of the cyclical components of the market too. Things like industrials, like financials. That's where leadership has been concentrated. And I think that's been a really important story.
And so do you think that the move that we've seen in semis, which, as to your point, has been broader than just large cap tech and the largest like an Nvidia, do you think it still has room to go?
I mean, if you're going to use breadth as some kind of indicator, yeah, I think there's probably, and I would say up the cap spectrum, much more in the large cap space as opposed to the small cap space, because even within the moves that we've seen in the what's thought of as the growth world, the mega cap growth stocks, actually, if you look at Russell 1000 growth and Russell 1000 value year to date, their performance is almost identical. Huh. So it's not necessarily this growth versus value thing, but if you look at Russell 1000 growth versus Russell 2000 growth, there's a much bigger discrepancy in year to date.
In other words, small caps
exactly.
Are
so it's been more of a cap factor story than it has been in terms of, is this just a growth trade or a value trade? There's been almost this sort of sweeping performance from the larger names, but even in Russell 1000 growth, I mean that's almost 1,000 companies, or 1000 value. That's almost 1,000 companies in each index that are doing well. So again, it's not just a mega cap story, but in the broader large cap universe, that is where the strength has been so far this year. And I think it's a reflection of where we've been in terms of tariffs and where tariffs have taken, the trade war has taken the biggest bite. It's been at the smallest end, not necessarily at the largest end.
Well, for more on all the latest market moves now, let's welcome in here Ryan Dietrich, Carson Group Chief Market Strategist. Ryan, great to see you, especially on set.
Yeah, it's fun to do this in person from your fine city, New York. Thank you for having me.
Great to have you as always, sir. Let's pick up right there on this discussion about Nvidia. What a milestone for that company. Yes. What a milestone for Jensen Huang. You saw that headline drop. What do you make of it?
I think it's a good reminder for investors. What we think about it in February, right? DeepSeek came out. I don't know exactly how much Nvidia was down, but it was crushed, right? Yep. And now here we are back to making all-time highs. I mean, we are in a bull market. This is a global bull market. Things get beat up a little bit. I've jokingly called this the Rocky Balboa market because the day after a down day, you tend to bounce back really strongly this year, and that stock just really shows that. But at the same time, I guess I'm not too surprised because that's a leader, and this is a bull market.
I wouldn't be surprised, Ryan, if some investors, they see when a company hits a milestone like that, maybe they think, all right, well, that's it. I missed my chance. I missed my opportunity. Best days behind it. Is that the right way to think about it as an investor?
I'd say no, because I think we've heard that at $1 trillion, $2 trillion, $3 trillion. So here we are at 4. So I'm not saying, I do think it'll probably keep going up because we're in a bull market, like I said there. But those round numbers, you can see some of that with the Dow 40,000. You sometimes see a little bit of that. But when it comes to these big market caps, I'll tell you, let's see about earnings. I know they report at the end of earnings season, but I'll tell you, death, taxes, and Nvidia beats on earnings. I joke, those are the 3 things you can always count on in life. We'll see, but it's been that way, obviously, for the last, going on 2.5, 3 years, and they have earnings.
Amy, I want to bring you in as well. What's your take on Nvidia hitting that milestone?
I mean, I think it matters in the sense that we've had so much concentration risk, Josh, and this only builds it even more. I speak to a lot of institutional investors, and their biggest fear hasn't been downside, it's been missing that chase. And here we are again. And I think, certainly you could call that a bull market, you could call it exuberance, you could call it a froth. It doesn't really matter what you call it, but when people have to jump in the pool, we see that quickly in options, and that's continued to happen in Nvidia, and I wouldn't be surprised if it keeps going from here too.
A broader question, Ryan, while I have you, since I know you study history so well, history buff that you are. What does history tell us about the second half, given the first half we've just had?
Well, I call it the sweet spot. Like you play golf, hit the ball, the sweet spot. When you're up between 5 and 10%, like we were this year, so not up a whole bunch or not down a whole bunch, just nice and solid. The rest of the year for the S&P has been higher 13 out of 15 times.
That sounds pretty good, Ryan.
Pretty good. Then you lay on one more when you're higher in May and June, like we just were. Usually those months aren't that great, so it's kind of rare to be higher. The rest of the year this time is higher 15 out of 16 times. These are just two stats. But when you look at these things, I'm an old school message of the markets, disciple. What's the market telling us? I've come on with you for a while, so the market is telling us it wants to go higher. And add what Amy just said there. Looking at sentiment, I mean, there's some froth, I'll admit. But what we're looking at, a lot of hedge funds have missed this. A lot of institutions. Look at that global fund manager survey, Bank of America. I mean, wildly underweight U.S. stocks. So you can kind of pick and choose there, but I'm not seeing froth that worries me significantly here, Josh. I still think it's a bull market, and I think this summer surprise rally will continue. One more. July's been higher 10 years in a row. My math is right. This year could be 11 if we're higher, tie the all-time record. I think there's a good chance that happens. And then as we get into the fall, maybe get that indigestion, whatever the worries are going to be. But there's a broad-based rally happening, and we need to listen to what the market's telling us.
All right, listen to what the market tells you. Things are looking good, Ryan says. What if, my friend, you do take a stumble here? Let's say there's a pullback, there's a correction. How do you think investors would respond and react to that? Do you think they move right back in, they buy that dip?
Well, we've seen that from retail crowd. I mean, retail has, we had the 10.5% drop in 2 days on Liberation Day, and what did we see? I mean, honestly, the retail crowd were the ones that got back in. Fortunately, the smart money and the big money, they've kind of been a little 1 foot in, 1 foot out. So I think they will. At the same time, dollar cost averaging, I think a lot of investors have learned. We've seen these big pullbacks and scary times before. Every year, scary headlines. I mean, I came here last August. You and I were doing this last August. What were we worried about then? The yen carry trade unwind. And that was a really scary deal, really big drop. Now it's like, oh, that's right, the yen carry trade unwinds. I'm not minimizing tariffs or whatever the next worry is, but earnings are hitting all-time highs. Profit margins are new highs this cycle. Yeah, there's some froth out there. Maybe some parts of the market are a little pricey. But honestly, it still looks pretty good.
Let me ask you, Amy, if we took a tumble like that, you think investors move right in, they buy that dip?
It's interesting because I was thinking about August 5th, the Volmageddon, whatever you want to call it, with the VIX spiking to 60, and that would have been a good time to get back in, right? It's these volatility potholes that come when there's a lot of liquidity that's left the market, which typically is August. So July is a good return year. July is a low VIX time, but then August is one where you actually do see VIX kind of go up 15% usually, because there's some sort of low liquidity stumble that we get. It could be yen unwind, it could be anything. Those typically are times if you were missing out on that chase and you do need to jump into that pool, those are typically good times to do it.
Ryan, I get you out of this. So when you're talking to clients and they say, all right, Ryan, things look good, you're constructive. What's the wall of potential, or what are the risks I need to have on my radar?
Well, clearly tariffs in one tweet. We know that. But I'll tell you a little step further, potentially a Fed policy mistake. We're in the camp that the Fed should have been cutting earlier this year. Yes, Powell has said we're not going to cut because of tariffs.
You agree with Trump. It's too late, Powell. That's what you're saying.
I'm not going that far, but we do think he should have been cutting already. I think he said 300 basis points in cuts. We're not saying that much, Josh. But the reality is, what if they should be cutting? Let's be honest, he was a little late hiking. I think he's a little late cutting, so that's one potential little pothole that's out there. There's still time, but I do want to say one thing at the end. I know your dad watches. Your dad said he liked me, so hi, Mr. Lipton. Just
Big Ryan guy.
Give a shout out to your dad.
Guarantee I get a text from Andrew right after this.
Okay, so good there. But again, thanks for having me as always. Love your city, and I'm going to have some good steak tonight, so I can't wait to go out. Yeah, thank you.